Well, currently we believe for the remainder of 2011 that equity markets have done as well as we think they probably will do. There's increased volatility in the world, increased uncertainty, and right now ROBECO doesn't believe that the equity risk premium is sufficient to justify further investment. So when we look at investing now for this year and on this short time horizon, then our tactical asset allocation team are recommending credits, both investment grade and also high yield. We've been positive at the beginning of the year on equities, and they did do relatively well. And we were positive on cyclicals, which also did relatively well. But now it's time to take the gains there and move into slightly more secure forms of investment. At ROBECO, we look, when we're looking at investing at the long run, we start off with a top-down view and a long-term view. So we take mega trends. So we try to identify what are the changes that are too big to ignore, the observable trends that are going to continue throughout a business cycle. So we position ourselves to be able to benefit from those. And I'll come back and talk about what we think they are. We then, after analyzing the mega trends, we try to place ourselves or locate ourselves within the business cycle. And then finally, once you've done that and you can see which asset classes do well at a particular stage of a business cycle, like early recovery, boom, depression, whatever, then you actually, within the asset classes, you try to find the most attractively valued securities. So if we look at the mega trends that we see affecting the world over the longer term, they start off with demographics. So generally it's driven by rising populations, greater income, and the fact that most of those things are concentrated on the emerging markets. So that gives us one very important megatrend theme. It then leads on to another, which is scarcity. And that's scarcity for all natural resources, because a larger population will demand them. Also, of course, with climate change as well, we're going to have to use some resources more than others. And again, with wealth, which comes through the demographic side, for example, with agriculture, people will be eating more meat proteins, which again is more resource intensive than vegetables. So if we look at those things, scarcity is areas that will benefit from scarcity should be invested in. And finally, we actually look at sustainability as being another core trend. Partly this is driven by governments addressing climate change. Partly it's actually driven by consumers who've got changing preferences. Consumers, and this has been shown around the world now, would actually be willing to pay a little bit more for something which they think is either good for the environment or is equitable or in some way gives them an additional feeling of well-being beyond the immediate joy of consumption. So for us, if we analyze those megatrends, then we say, well, what we should be looking at, if you combine all of those together, is resource scarcity and inflation. And we are recommending that people, as much as possible, invest in real assets and things that will benefit in the type of environment that I've just talked about. So gold is a store of value, that is true, but it's not a productive asset. We see the rise in some commodities, particularly in gold, as being very much liquidity driven. Money's being printed and therefore people want to hedge that. Gold is a good hedge. That's not quite the same thing as the type of scarcity which we're talking about, which is real scarcity from a growing population and growing world. And in that sense, food has become a central pillar of what we're looking to invest in at ROBECO. And of course, Rabo, our parent, is the world's leading agri-bank, so it makes sense for us to specialize in that. Now, with food, we've been asked by governments here and institutions in the Middle East to actually create and advise on a private equity fund to invest in food in all those countries in the middle. At the moment, a lot of people invest in agriculture in North America and Latin America, Australia as well. But if you actually look at the region starting from North Africa, moving through to Turkey, this area, and then going up to Central Asia and places like Kazakhstan, and then moving on to Malaysia and Indonesia, there's a huge opportunity there where you have some countries which are have got huge productive potential for agriculture. You have other areas like the Gulf which have very little, but they've got a massive surplus of capital. So we're going to be working to try to rebalance that and actually put some of that capital to work in countries that could be more productive and also to invest in the transportation, logistics, and storage to allow those countries which have got the productive capacity to produce and then to take them to markets such as the Gulf, which are actually challenged in terms of their ability to produce.
Okay.
Well, I think so. I mean, one of the at Rabobank, we believe that Rabobank believes that to meet the growing demand for food, and food demand would increase by 70 to 100% on a global basis by 2050. They believe that $30 billion a year needs to be invested in agriculture. Now, if you look at the area which I've talked about, which is also the Muslim area, the Islamic bloc, that's currently the fourth largest economic bloc in the world. It represents around 15% of the world's population and 3 trillion in assets. Now, if we talk about the demand for food going up overall with population and rising income, well, this is an extreme case because population growth in this region is going to be amongst the highest in the world, and likewise with income growth. So from a demand perspective, we see the investment potential in these countries as being particularly high because there'll be accelerated demand here compared to other parts of the world. Likewise, if you look at the current supply side inefficiencies, in Holland, for every hectare, you can produce 8 tons of wheat a year. In Kazakhstan, it's 1 ton. So you've got an 8-to-1 ratio. So for knowledge transfer, catalyst for growth on the supply side, there's immense potential. And then finally, the fact that within this region, there are governments who actually have the capability to provide capital for it, means that they've been looking for a group who can actually invest. So right now, we're actually forming with a tried and tested private equity team who are based in this region, who've already deployed in the past $700 million in these countries, and we will be then advising them on the private equity and on the agricultural aspects of that.
Okay, great.
Well, again, if we look at the mega trends, you can see coming down from that, if I talked about demographics, so we are still believers in emerging markets. Though this should not be taken in a purely literal sense. This does not necessarily and always just mean investing in China at all times. There's always valuation to consider. In fact, there's a strong argument to say the smart money isn't necessarily investing in China. The smart money is putting its money where China puts its money. And China right now is investing all over the world. So we would be aware of the emerging markets theme, but think of it broadly. Don't just think of it in purely geographic terms. If you're looking at other areas that we see continued growth in, definitely consumer goods. The rise of the middle class in emerging markets gives you a significant opportunity there. Resource scarcity, well, we've talked about that for agriculture, that's very important. It's also a significant issue in sectors like base materials or basic materials, building materials. It's important in areas like fuel and energy, and we have a smart energy capability. So that's not just investing in renewables, it's investing in all parts of the energy chain which can be made more efficient. Carbon capture is a new technology, for example. And it's also other elements of sustainability, such as climate change, or looking at the fact that people are living longer, so healthy living. Okay. On the debt side, with so much debt being issued in the world, then you've got to be very, very careful where you would see a growth area in that. And what we are seeing a lot more demand for now is duration hedging. So our investors will invest with us for our skill in picking different fixed income securities, but they will actually, and we will for them, hedge out the risk of interest rate moves. So there's an interest there in absolute return as well.
Okay.
ROBECO as a group, I think the challenges you have to face if you're looking at megatrends, you're looking at inflation, you're looking at food, it's relatively easy to spot these trends. The whole point of a megatrend is that it's observable. The difficulty is, and the challenge is actually incorporating that into existing ways of allocating, existing methods. So for example, at the moment, most institutions around the world base their investments on market cap benchmarking. Now, the oddest thing there is if you look at fixed income, where the more a country issues debt or the more a company issues debt, then the more you should invest in it if you're following a market cap benchmark. Though intuitively, most people would say, well, why on earth should I invest in a country more because they need to borrow more? It doesn't necessarily make sense. If you look at equities, the market cap indices, again, can encourage people to be buying high and selling low. The bigger a company gets, the higher its share price goes, the more people buy it. So you're buying high, you're selling low. Again, not necessarily sensible. But if you're challenging these obvious weaknesses, you then need to come up with an alternative asset allocation framework which can address those weaknesses, which can incorporate megatrends. But to actually do that in practice and to cope with the pace of institutional change, because institutions have their own timetable. They'll have a quarterly meeting, 6 monthly, annual. There are only so many things they can address. And this is something that we're actually talking with our clients about as well, moving to a more real-world based method of investing and allocating assets. But it's not something that either we or our clients can do all in one go.